Canada is officially in a recession. Statistic Canada confirmed it last Friday with 2 negative quarters back to back. And in the next 10 minutes, I'm going to walk you through the numbers that actually matters for you, what the Bank of Canada is about to do on June 10th, and what all of this means if you're buying, selling, or renewing your mortgage in the GTA right now. Let's get into it. What the data actually says, in the first 3 months of 2026, the economy actually shrank slightly by 0.1%. Since it also shrank by 1% at the end of last year, so the economy has now been shrinking for most of the past year. What makes this surprising is how wrong the predictions were. Experts expected the economy to grow by 1.5%, but it shrank instead. That massive gap between what was expected and what actually happened has the government paying close attention to it. Looking deeper at the details, businesses are continuing to spend less money with investments down 0.7%. Builders are also spending 2% less on building homes, and the number of housing being bought and sold took a huge dive of 9.9%, on the fastest drop we have seen outside of the pandemic. However, early numbers of April show a small bounce back of 0.4%, mostly because oil and gas are making more money right now due to the conflict in Iran. So experts are saying, are you already recovering from the recession, or high oil prices just hiding how bad the rest of the economy really is? This is a big debate happening right now. So what Bank of Canada is planning to do? Let's predict it. As of now, the prime lending rate is 4.4%. So the Bank of Canada will make its next rate decision on June 10th. Right now, financial markets show a 97% chance they will keep the rate exactly where it is, a 3% chance they will raise it, and 0% chance they will lower it. So you might wonder why they wouldn't lower the rate to help economy during a recession time. The answer is inflation. The rising cost of everyday items. The conflict in the Middle East has pushed all prices up, and the bank expect inflation to peak near 3% before it drops back down. So if they lower the interest rates while prices are still climbing, the risk is undoing the 2 years of hard work. Even the chief economist from BMO Bank pointed out that the weak economy report should completely stop any talk of raising rates. However, the Bank of Canada leadership came out on Monday and essentially told everyone to stay calm and not overreact to just one piece of bad news. So in plain English, interest rates are going to stay exactly the same on June 10th. So if you have a variable mortgage, your monthly payment is not going to get any cheaper next week. But what that means for a GTA market? So there's one single statistic from a recent industry survey that explains exactly what is happening in the housing market right now. So out of over 1,000 real estate professionals surveyed across Canada, 40% said that fear of recession is the main reason buyers and sellers are waiting on the side. So that worry ranked higher than interest rates, job concerns, and overall affordability. So that matches exactly what is happening across all the major cities of GTA. You talk about Mississauga, you think of Oakville, Toronto, Caledon right now. So the market itself isn't broken, and the numbers actually make sense for a lot of buyers. People are simply nervous, and that fear is keeping them from making a move, because when you are in fear, you are not able to make any decision. So for buyers, if you're looking to buy a home in the GTA area, here is exactly what you need to know. Competition among buyers is way down. Conditional offers are back, meaning you can safely include financing, home inspection clauses in every offer again. These are the clauses that let you back out if your financing falls down or the inspection reveals a major problem. Sellers are much more willing to negotiate on the final price. We had a deal done on the buying side recently. We found an issue in knob and tooth with the wiring. We negotiated the price $5,000 on the deal, or we were planning to move out to the next deal. Eventually, sellers fixed that, or they negotiated to reduce the price. So if your income is secure, your down payment is ready, and you plan to hold the property for at least 5 years, you are standing in the strongest buying position seen since 2018. The smartest approach right now is to avoid trying to time the absolute bottom of the market, as that is nearly impossible to do. Focus on instead on buying when the home it fits your family needs, and the most important part, affordability. That is, your monthly payment is securely fits your budget, so you can sustain that property for the long duration. Now for sellers, if you're selling a property, the rules of the game have completely changed, and you need to adjust your strategy. Home priced based on what a neighbor got back in spring 2024, even 6 months before you are sitting on the market for 60, 90 or longer than that. So they eventually end up selling for less than they would have priced accurately accurately from day one. So for you, pricing is very important. Overpricing is the single most expensive mistake a seller can make right now. Second parameter is the location is very important. So you need to do the analysis which locations are hot so your property will sell quicker. Third is what is the condition of the property, how well the property is maintained. Recently, any listings we are bringing to the market, we educate the seller to bring it in a crisp condition. So 3 tips for you. Pricing, price your home based on actually sold data in the last 30 days, not last year's market. Presentation, make the property look move and ready with professional photos, strategic home staging, and patience expected to take 60 to 90 days to sell rather than just 7 days. Buyers are still out there, they are simply being extra careful. The right buyer will come along if your property is positioned correctly. And also you need a right marketing as a bonus tip if you want to sell your property quicker and at a right price. Now, preparing for the mortgage renewal. If your mortgage is coming up for renewal within the next 6 months, you should start shopping around for interest rate this week. Most lenders will hold a rate for about 120 days, meaning there is no reason to wait until your renewal week to find out what your new payment will look like. So here is the real math. If you originally signed your mortgage between 2020 to 2022, you're likely switching from a rate of 1.5% to let's say 2.5% range. Today you are walking into 4.5%, 5% range. Let me give an example. On a 500,000 mortgage, that translates to another $500 on an average more every single month. Make sure to look at those numbers before signing any paperwork. There may be options to extend your total payment timelines, that's your amortization, switch to variable rate, or restructure the loan to fit your budget. However, you need to know your options before you walk into the bank, not after. So to sum it up, Canada is technically in a recession. April is already rebounding because of oil, and Bank of Canada is holding interest rates on June 10th. The GTA market is slow, but it's moving. Buyers finally have a leverage, seller need to price accurately, and anyone renewing a mortgage needs a plan, not a hope. So if you need help understanding what this means for your own home buying journey or for a selling journey, feel free to reach out to me. You can send me a DM on Instagram or just drop a comment below. If you want to deep dive into exactly why prices are dropping right now, make sure to check out this video here. Thanks for watching, and I'll see you in the next one.